Hi, this is Zach Mayer with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 26th of September. Starting off with the FTSE 100, which is trading either side of the floor of that rising trend channel drawn there from June. I suppose the real level there probably around 9,200, and above that, looking for this market to break the record highs 93 or record high 93.57 from back in August, and hit the top of that rising trend channel as high as 95.30 by the end of next month. But the key here is, I suppose, a decent end of day, end of week close above recent 92.60 resistance. You can see that we've had another RSI 50 rebound, so hopefully second time lucky. We didn't really go back too much on the first signal there, but there was that probe to 91.77 on Wednesday. But ideally, we stay above the 50-day line, 91.79, whatever happens on an end of day close basis, and then head higher. Moving on to the DAX, which has been a dead market, so dead that I'm wondering why I actually look at it. But here, still near the floor of that channel there from April, RSI still below neutral 50. We're in a range between around 23,400 and the 50-day line, 23,900, and not really much to do between those particular parameters unless we get an end-of-day close back above RSI 50 or we break the 50-day line. On the downside, always the chance of a rug pull down to the 200-day line, 22,800. Dow is next, and here we've had 3 down days, which is rather painful, but has taken the market down to the RSI support line there around 56, which is actually a good place for a potential revival. Ideally, we stay on the right side of recent support around 45,600 and bounce back again to the record highs through towards 46,700. Still looking for up to 47,700 by the end of next month at the top of that 2024 rising trend channel, while we're above the 50-day moving average at 45,100, and certainly while the RSI stays above neutral 50, which it is just about doing at the moment. Cryptos are next, and the first one is Bitcoin, which has broken below the floor of that rising trend channel. We've got a horrible RSI configuration there, so the RSI there at 37. I have hit a support line, so maybe there'll be a bounce here from around the 109 area. But we had factored in a test of turn of the month support 107, and even still factoring in a potential test of the 200-day line at 104. Only an end of day close back above at least the floor of the channel, broken at 111 level, or preferably the 50-day line at 114, really getting this market out of trouble at the moment. Also, it means that we might have to readjust our rising trend channel there. At the moment, we can still have a target there at the top of the channel as high as 132,000 by the end of next month, but obviously time is running out. Ideally, we're back above RSI 50 before this market really gives us a proper bullish steer. On to Ethereum, where there were hopes that we would get up to 5,500 by the end of next month. At the moment, those hopes look as though they've been dashed. In fact, the market struggling to stay within even the adjusted rising trend channel, which is now heading towards 5,400. I suppose you could give this market the benefit of the doubt and say yesterday's low is the floor of the channel, so we shouldn't go now below the 38.27 level, but that's already below the old July resistance, 39.20. The positive, I suppose, in terms of the RSI now is that we've actually bounced off RSI 30, so potential here, if you are a fan of Ethereum, to take the plunge and hope that the 3,900 area will be the support for this market, but not really much now between 3,900 and the August support there at 3,300, which was flagged yesterday. Moving on to gold, and here we hope that it's an easier and happier picture, and it certainly is at the moment. We're finding new support above old initial September resistance, so around 37.10 above that, hoping for pretty direct move there up to 38.75, which is the top of that channel from April. We're previously hoping for that by the end of next month, but the way things are going, might even squeeze there by the end of this month or pretty soon after. Worst case at the moment is a test of the 3,600 zone, recent mid-September support. Maybe on to the stocks, and starting off with, added in a few obscure ones because you're obviously always looking for the new winners. Here we've had Celsius Resources, which is a gap through the 200-day moving average, normally a significant thing to do, and above that at 0.39. looking for a retest of the 0.6 area maybe by the end of next month. I think this stock, obviously very illiquid, but when it moves, it can move. And that unfilled gap to the upside above a rising 50-day line could be enough for people if the spread here is not wider than the Atlantic, which in these kind of situations it normally is. On to first class metals, which I haven't looked up for a while, and it's back not with a bang, but at least it's broken recent resistance around 2.25 pence above that. Looking at the top of the range and the top of that triangle there from October last year as high as 3.5 pence by the end of next month. It's positive here that both the 50 and 200-day lines are now rising. If you look closely, you can see the 200-day line is rising. The 50-day line certainly is, and we've had decent amount of positive candles there, opening at the low, closing at the high. So that shows that I think some people are returning to this situation in a positive way. On to a requested stock where the oil is flowing again for Gulf Keystone. Here we've gapped through resistance, which is normally a very strong signal, even though we've pulled back a little. We're at basically at 2-year highs, which ties up with the last time the oil was flowing. And here the rising trend channel heading towards the £2.50 area, which I suppose would be an end of October target for the shares, while we remain on the right side of recent broken resistance around 210 pence. So ideally, staying above the £2 area and heading up to 250. Obviously, a lot of the gloss of the latest announcement, it has been already anticipated by the market, so perhaps not as explosive in terms of the oil exports resuming as we might have hoped for. Next on the list is GTC, otherwise known as GETECH, and here we were also got an interesting charting situation, trying to break through that resistance there around basically around current levels, 205. End of day close above this, and we could quickly push up towards 2.75 pence by the end of next month, or even sooner. Once again, we got those positive candles in the recent past, but of cork and water rebound yesterday as well. 50-day line also rising, so that gives us hope that the forensic charting might actually work. Moving on to Gem Resources, which had a decent update today, and heading towards our near-term target there at 0.8 pence. You can see that actually if we can get through 0.8, there's not much then in terms of resistance until we get to a penny, but we have been here before in terms of trying to recover. The main thing, I suppose, in the near term now will be that we have that 200-day line rising. It's also positive that the rally here started with an unfilled gap to the upside off the low, which actually shows quite a sea change in sentiment anyway. Only back below the 200-day line now, 0.37, really delaying the upside scenario. Moving on to another stock which was in the news today. Seemed to be quite pleased about selling its stake in Blenco, but here we've got Jangada, and we've got it focused on its gold project in Brazil from memory. Here we've got a V-shaped rebound off the 200-day line there at 0.79. Above that, we're looking for the top of the range and the top of that triangle from November as high as 1.5 pence. By the end of next month as a best case scenario target. You can see there have been 2 or 3 rebounds at and above RSI 50, so this looks as though there's a bit of positive momentum behind the price action. Moving on to Mast, and here was sort of a rug pull after the dead cat bounce that we had. Probably want to see now the shares close the week or close over the next few days back above the 50-day line at 107. Otherwise, we might have to have a more extended consolidation. But it was a decent rebound anyway after the company shot itself in the foot with a recent RNS. Next up is Nuformix, which hopefully will be part of the great British biotech revival of 2025. We've already had a couple of big RSI 50 plus rebounds. We've also got the 50 and 200-day lines both rising, so it's effectively a golden cross. And looking at the top of the range at 0.26, while we're above the broken resistance line there at 0.1. And hopefully the shares take off from current levels. I believe there's a run up to an FDA situation for the company as well, so that normally is pretty good for a biotech. Moving on to Oracle Power, which where the company hasn't spoken to me for a while, but can still do the charting anyway. We've had a triple rebound in the RSI window, which is normally a great a leading indicator on the upside. We've broken recent resistance at 0.02. So looking for a minimum of 0.03 with the August resistance, and shares already moving as I speak. And basically, hopefully here up to 0.046, fundraisers permitting, etc. But it looks as though, or at least we're going to be on the right side of 0.02. And while that's the case, up to 0.045. And if they can hold off on any fundraisers, hopefully much more than that. Priority one is next, and another announcement today, launching products almost every other day, it feels. But here, potential triangle breakout through the 2.7 pence area. Above that, looking for a minimum at the 50-day moving average at 3.67. But just looks as though maybe the slack has been taken up and the shares are ready to turn around. Best case would be up to the 200-day line of 5.25 by the end of next month, or we remain above 2.7 pence. Just wanted to look at the current charting situation at Smarter Web, which seems to have hit a bit of a wall there at that resistance line there from January, 105 today's, or rather 110 today's high. Below that, we've got the 200-day moving average at 93 pence. That's obviously the first support. We need to have that hold. But if we do break below the 200-day line, there's a risk of a further move towards the low 50s and that June support line projection. But hopefully the 200-day line acts as support one more time. Finishing off with a stock which I haven't looked at for quite a while, which is Shuka. Here we've got a gap closed buy signal and also closed above or pushed above the 200-day moving average at 4.1 pence. Looking for an end of month or end of October rather test of 7 pence plus, while we're above the 200-day moving average at 4.15 pence. 50-day line rising nicely and an uptrend line in the RSI window also helping the cause. That's it for me today. More updates over the weekend.